Welcome to Wales Tech Week 2021. Thank you to our partners. Enjoy the session.
Hello and welcome. Welcome to this Wales Tech Week discussion about Bitcoin. We felt it was time that we talked about Bitcoin. I'd like to welcome you to this session, which is in partnership with Fintech Wales. Fintech Wales, for those of you who don't know it, is a members organisation, not for profit, with a mission to enable Wales to be a globally recognised centre of excellence for fintech. It's my absolute pleasure to chair this panel this morning and to welcome the guests that I have joining with me. First of all, I'd like to introduce Arman Eshraghi, who is the Professor of Finance at Cardiff University. He's also the chair of the Finance and Investment panel there at Cardiff. Arman will be taking us through a keynote, sharing his thoughts and some research and background on Bitcoin. Following Arman's generous insight to Bitcoin, we will then go into a panel session. And on the panel, I have with me this morning, and I'm delighted to welcome all of them, some real experts in this space. So Jack Davies, who's one of the researchers at nChain. Good morning, Jack. Lovely to have you with us this morning. Stephen Quinn, who is one of the investors in W2 Global, but also spends his time advising lots of exchanges with regards to crypto, digital wallet, and the this new fintech space. And we also have with us today, who's taken time out of a very busy day job, because I know they're releasing product updates on a weekly basis. We have Minyi soon. Welcome to you, Minyi. Delighted you're able to join us. Minyi is the head of product at Ziglu, which is one of the new crypto exchanges that's come to the market in the last 12 or so months. It's excellent to have the panel with us. I'm going to hand over, first of all, to Arman, who's going to take us through his keynote speech.
Hello, good morning, everyone. Thank you very much, Sarah, for this kind introduction. It is my absolute pleasure to be able to talk to you about Bitcoin. In fact, the title of our keynote is we need to talk about Bitcoin, and we really do. What I will do in this talk is start with some basic facts so that we can get our definitions straight and make sure we're all on the same page, and then move on to discussing why Bitcoin matters, why we really need to talk about it. And then as a professor of finance, I would put my academic hat on and present some of the highly cited academic research that has been conducted on cryptocurrencies and specifically on Bitcoin. And then I will conclude by asking some open questions and expressing some personal views. Right, so in terms of the basic facts, there is indeed a jungle of terms when it comes to Bitcoin, and sometimes those terms are used interchangeably. It is sometimes humorously said that cryptocurrencies are a combination of everything people don't know about money with everything people don't know about computers, all combined. So let's get the definitions right. First of all, we could start from distributed ledgers or shared ledgers, which are effectively the polar opposite of single ledgers. So distributed ledgers are records of transactions which are stored, replicated, shared, and synchronized digitally, or not necessarily digitally, but usually digitally, in different sites, different countries, different institutions, usually across a different wide computer network. Now, perhaps the most famous example of a distributed ledger is the blockchain. So the blockchain is the database that records typically transactions involving value, such as money, goods, property, etc. But it doesn't necessarily have to be that. It could be any sort of information. in blocks, where those blocks are linked together or chained together using cryptographic signature. And those innovations in computer science and in cryptography are indeed impressive. As we know, the most famous example of the blockchain is the Bitcoin network, which came to being out of a famous white paper written in 2009 by the pseudonymous Satoshi Nakamoto. Not all distributed ledgers are blockchains. So that's the first thing. Secondly, we have different types of blockchains. So we have public blockchains where anyone can access and view the full ledger. And then we have private blockchains where only a select few participants can view the transactions. In addition, among public blockchains, we have two more subcategories. We have permissioned public blockchains in which only a few participants have the right to verify the transactions. So among all public blockchains, we have the permission category where, of course, everyone can see, but not everyone can verify. So you have to have a certain permission in order to be able to verify the transactions and maintain the integrity of the ledger. More or less like the Ripple network. But then we also have the unpermissioned public blockchain, where any user can join this network and start contributing to that verification process. So anyone can help maintain the integrity of the ledger. And of course, as we know, through this process, because, well, in certain consensus mechanisms that is energy intensive, you need to have a reward. And that reward could be indeed a token such as Bitcoin or a fraction of Bitcoin. So that is what the whole mining process is about. So to summarize, if there is only one copy of a ledger, then we deal with a traditional ledger, which is more or less what traditional banks operate on. If there are multiple copies of the ledger, then if those multiple copies are only viewable and accessible by a private group of individuals, then it's a private blockchain. Otherwise, it's public. And then the final question to ask is, who can maintain the integrity of this ledger? If only a select few can, then it's a permissioned public blockchain. And if anyone can, then it's an unpermissioned public blockchain. And of course, the most famous example of an unpermissioned public blockchain, as you can see, the first category here, is the Bitcoin network. So that's the world's most famous blockchain. It's the world's largest blockchain, and it is the one that matters. Not to say, of course, that the others do not, but in comparative terms, that is the one that we would like to talk a bit more about today. Right. So effectively, we have these three types, and so using these terms interchangeably should ideally be avoided. Now, blockchain, of course, has many applications, not just in cryptocurrencies. Many companies are implementing blockchain in their internally in order to streamline their processes, their supply chain, their tracing, and various other applications. If as a business, you're wondering whether blockchain is the right solution for you, because it cannot always be the right solution, there are a number of good questions to ask. And the World Economic Forum has compiled a list of 11 questions to assess whether blockchain is a suitable solution. So the recommendations is, in certain cases, you should not use blockchain. In certain cases, blockchain might work. And in certain cases, there is a strong case for using blockchain. So I would suggest that if you're, as a business, you're considering whether you should enter the blockchain space, it might be useful to take a look at this list of 11 questions. But of course, Bitcoin, it can be argued, is the most famous application of blockchain as we speak. Why does it matter? Well, it responds to multiple needs, really. Let me mention a few very briefly. First of all, cryptocurrencies and Bitcoin can be used to do money transfers, so peer-to-peer electronic payments. Traditionally, the banking system, the traditional payment systems have been kind of 9 to 5, Monday to Friday. Crypto proponents like to argue that, for example, if you're sending money to Japan, it probably is even quicker to put that money into an envelope and post it rather than do it through the banking system, because it will take up to 5 days for your wire transfer to go through the full settlement process. And in theory, peer-to-peer electronic payments using the blockchain are extremely faster. But that is not fundamentally why Bitcoin was created. The fundamental reason why Bitcoin was created is perhaps more philosophical. So as you very well know, most of the financial system today is based on a single trusted arbiter, such as a central bank. The crypto proponents argue that single trusted arbiter can also be a single point of failure. It can concentrate power, and if that trust relationship breaks down between the users of the system, i.e. the people, and that single trusted arbiter, such as a central bank, then there will be disturbances in the value and the medium of payment, which is the value of the money. And while it might be perhaps a bit more difficult for people living in more advanced countries to think about that break of trust, in certain other regions of the world, that trust is already broken. And so that could be philosophically a reason for having a payment system which does not need a single trusted arbiter. Now, this is where the debates gets very hot, because on the one hand, proponents of cryptocurrencies would like to think of themselves as forward-thinking, libertarian innovators. On the other hand, by the governments and the people who believe in the in centralization of monetary power, they're labeled as crypto anarchists. So there is that debate going on, and especially after the 2008 crash, where central banks started printing money through quantitative easing at a much faster rate, and particularly after COVID, which that rate even accelerated more. Clearly, the debate between fiat and crypto has got a lot hotter. But the open question here is, and this is something that we could address and discuss in the roundtable, is whether cryptocurrencies are a suitable alternative to fiat money, because there are, again, some scholars who argue that cryptocurrencies are like digital fiat. So we have to focus on what fiat money is whether fiat money should have any intrinsic value or not. And that's where comparisons between, for example, gold and Bitcoin and other cryptocurrencies become very relevant. And this is something that we can explore in more detail. So you do need, if you believe that you should try to design a system where there is no single trusted arbiter, then there are a number of points to consider. If you think about data can be replicated multiple times. If you have a video file on your computer, it can be you can copy it, you can attach it to an email and send it to someone. So that means there will be now two versions of that file, one on your computer and the other on the recipient's computer. But if you want to digitalize money, then you should make sure that that cannot happen. So first of all, only you can move your money, not someone else. So in the same way that, for example, your brother might be using your computer and also use that video file, that should not happen with digital currencies. You should also make sure there is no double spending, so that you won't be able to send the same file to multiple people as if spending the same amount of money. And this is clearly not so much a problem with paper money, because if you have a paper note in your pocket, you can't spend it twice. But if you have digital money, well, without the blockchain innovation, this is not very obvious, because if it's a file, you can, as mentioned, you can email it multiple times. So you need to make sure that those transactions are recorded, are verifiable, and they cannot be tampered with. And that is the whole point of consensus algorithms. So that's where we have proof of work and other consensus mechanisms to make sure that those verifications do happen. And so money gets created through rewarding other users who help with that verification process. And so, of course, the most famous and the most widely used consensus mechanism right now is the proof of work mechanism, which effectively is a very simple way of explaining it is you will ask somebody to do a big computation, and you want that person to prove that they did it, and you personally do not want to do much work checking that proof. So so the proof of work consensus mechanism helps us achieve those objectives. But of course, one single drawback is that its computation is very intensive, which means that it is also very energy intensive. And that is, of course, again, one of the very hot debates in this area. So can other consensus mechanisms be designed to replace proof of work, which are less energy intensive, but can achieve the same objectives? And this is something I will touch upon a bit later. If you're interested in getting to know more about how this works, for example, you might be interested to have a look at this website, hashcash.org, where you can see how proof of work actually takes place through a simulation. So that might be of interest to some members of the audience. Now, let's take a step back. So there are many cryptocurrencies that use these algorithms, these consensus mechanisms, proof of work and otherwise. And currently, as we speak, although this may not be exactly up to date, because in the crypto world, things change by the minute, but I took this screenshot last night, in fact, and as As things were last night, Bitcoin price was $33,500 roughly, and it had a market cap of just over $600 million. As we know, and you can see that it is followed by other cryptocurrencies such as Ethereum, Tether, and so on. As we know, the cryptocurrency market has been going down in recent times, although it was going up significantly, of course, since before the start of this year. And in fact, since COVID hit, for all the reasons mentioned, including central banks printing money and so on. But more recently, there have been some restrictions placed on government and regulatory restrictions on Bitcoin in places such as China, and that is partly an explanation for why the markets seem to be falling at the moment. Although, again, it is extremely difficult to predict what will happen afterwards. Now, we're talking about Bitcoin, so this is perhaps the most important graph from a finance perspective to take into consideration when it comes to Bitcoin, and that is the Bitcoin price chart. As we know very well, there was one significant up and down or boom and crash or bubble, depending on how you look at it, around the end of 2017, beginning of 2018. And since then, there have been some volatility, but more recently, around the end of the previous year and the beginning of this year, there's been a very significant rise and also a very dramatic collapse. Although still, Bitcoin price is significantly more than its long-term average, if you take a longer view. So you could argue that we have, looking at Bitcoin historically and longitudinally, we've had two very significant price crashes or bubbles in going back in time. So one at the end of 2017 and one at the end of 2020 or beginning of 2021, in fact. Now, that big picture can be given a lot more context by looking at how Bitcoin was created, how the exchanges helped with the price volatility, how the forks in Bitcoin, which means when there is a divergence in the algorithm, how those forks led to the creation of new sister currencies for Bitcoin, a number of which also carry the term Bitcoin in them, such as Bitcoin Cash or Bitcoin SV or Bitcoin Gold, and how we can understand why the price has followed this particular behavior. So there is a big picture. That big picture is important from a financial perspective, and it is very important, I think, to look at this big picture and try to digest it in a dispassionate and calm way, because unfortunately, a lot of the crypto coverage that you see online or through social media is extremely emotional and sentimental. So it's important to be as unbiased as possible and as dispassionate as possible and see both the merits and the drawbacks of this innovation. Speaking of which, I would like now to invite your attention to a number of academic studies that have been done in this area, kind of a whistle-stop tour of a few highly cited papers. So the first one, so I've been talking about the advantages of Bitcoin, the fact that in theory, it is a fantastic tool for dealing with the single trusted arbiter issue. And in theory, it is anonymous. It is a brilliant tool for electronic peer-to-peer payments, which do not know any borders, which are indeed, in their essence, completely safe. However, that anonymity also has a dark side. So 2 years ago, a paper was published in a very respectable finance journal, which showed that there's quite a lot of illegal activity that goes on the Bitcoin network in terms of its transactions. At the time, the authors of this study estimated that around $76 billion of illegal activity occurs every year on the Bitcoin network, which at the time was something around 46% of Bitcoin transactions. So talking about Bitcoin, but ignoring this dark side, I don't think helps the debate. So we need to be dispassionate, and also we need to acknowledge that a lot of this also goes on. Now, it would be interesting to see whether this illegal activity has over time increased or decreased, and to what extent transparency on the blockchain network can help put a damper on this sort of transaction. And my own personal sense is that we are moving in a direction where transparency is helping diminish this sort of illegal transactions. And I will defend my view a bit further on. But there is a dark side. Very recently, I think this news is from yesterday, in fact, South Korea seized quite a lot of crypto assets in a clampdown on supposedly tax dodgers. So it seems that governments are stepping in to rectify the sort of inefficiencies they see on the crypto market. Now, but of course, this in itself is very controversial because crypto proponents argue that when you park your money in crypto, then that is completely safe from government intervention. And of course, government intervention can be both good and bad. So to the extent that you think South Korea took the right step here, this can be debated. Now, the second study showed that proof of work is not the only solution to providing consensus on the blockchain network. So we have other consensus mechanisms. We already know that other consensus mechanisms exist, such as proof of stake. But this particular paper, which has been published only a couple of months ago, shows that theoretically, other consensus mechanisms, such as proof of stake, can work just as well as proof of work. And of course, we know that they are far less energy intensive. So this is potentially a great news for the future energy consumption of Bitcoin and other crypto markets, if they can all collectively decide to move away from proof of work into other consensus mechanisms. Other research in this area has shown that smart contracts have many benefits, and so cryptos that are built on smart contracts, such as Ethereum, can have benefits compared to their peers. We already know that Bitcoin is much smaller compared to other commodities, such as silver, oil, in terms of the volume of transaction. And this brings me to the fourth study, which shows that in a way you can predict crypto returns through the level of attention that investors pay to the crypto markets. So as you know, investors are very interested in being able to predict future returns of financial assets, whether it's stocks, bonds, gold, and of course, crypto. Now, it seems that specifically it is the attention of investors which seems to be the main driver of crypto returns. So to what extent are people paying attention? And you can measure that attention in a number of ways. For example, through their Google search volume, through the sentiment on the social media, and so on. So if you're interested in learning more about the details of returns within the cryptocurrency market, this might be of interest. Now, again, another very hot debate in the crypto market is whether forks are inevitable. So forks are, again, these divergences that happens on the on each cryptocurrency. For example, a few years ago, Bitcoin forked into Bitcoin and Bitcoin Cash, and Bitcoin Cash itself forked into Bitcoin Cash and Bitcoin SV, and so on. So these forks, are they useful? Are they not useful? Should we encourage them? Should we avoid them? According to this particular research, firstly, they're inevitable, and secondly, they are an important component of the evolution of the Bitcoin network and of the cryptocurrency ecosystem in general. So, so they are helpful. They can be painful at the time, but in the long term, they are helpful because effectively it means rolling out a new product, which might have benefits compared to the old product, and so they are inevitable and useful. Now, another very interesting piece of research has shown that initial coin offerings have attributes which are very similar to the attributes of initial public offerings or IPOs. So more or less, although the process is quite different, but more or less, we know that companies go public through an IPO process and coins get offered through an ICO process or ICO process. In the IPO literature, we know that initially companies offer their shares at a low price to generate interest. And then if the IPO is successful, usually that share price tends to go up. So that's known as IPO underpricing. Now, it's very interesting that we also see that in the crypto literature, that initially coins are offered at very low prices compared to their future trends, and then they typically go up. So those patterns are similar, and that's, again, from a financial perspective, very interesting. And finally, the last study I want to show, which made a lot of buzz when it came out, showed that the Bitcoin 2007 boom and bust, so that was the first major bubble in Bitcoin, was partly a pump and dump. And the other crypto called Tether was partly to blame for the significant boom and bust that we saw in 2007 on Bitcoin. So in other words, you could have said that the Bitcoin 2007 crash was partly avoidable had it not been for the role that Tether played in the way that things panned out. And of course, we're referring to this one. So that then leads to further very interesting questions on whether Bitcoin price movements in certain cases do resemble speculative bubbles. And from a behavioral finance perspective, then that is a very interesting debate to have. So pump and dump, evidence of pump and dump exists in the crypto markets. It is unfortunate that it exists, but it does, and we have to acknowledge it. It is not entirely surprising that it exists, but we have to acknowledge it, and we have to try to fight it head on. And of course, that's where the regulators come in. So to conclude, I will leave you with some final thoughts. One is the crypto market sufficiently diverse? Now, if we look at one aspect of diversity, which is gender diversity, according to a survey in 2020, 21% of crypto investors were female, and that proportion has gone up to 31%. So it has risen by 10% in about a year's time. So from a gender diversity perspective, it seems that male dominance is shrinking, and that can only be a good thing, because, again, from a behavioral finance perspective, we know that men can be more overconfident than women, and that has been shown psychologically. So companies that have all male boards of directors, for example, tend to be more reckless, tend to be more aggressive. And so maybe if more women enter the crypto space as investors, as users or traders, that can make the market a bit less frothy and less emotive, and perhaps calmer and more rational. So again, I think that's a very positive trend. And the other thing we see is that, according to the same survey, about more than 80% of crypto investors report that they have no, very low, or moderate levels of crypto knowledge. So we're dealing with a market where everyone has heard of Bitcoin, but very few people can actually distinguish Bitcoin fundamentally from other cryptocurrencies in terms of its attributes. They can, very few people understand the technology itself. And so that needs a very significant effort to train the public on what this beast is, so that then they can make calmer, again, and more rational decisions when it comes to when to enter the market, for how long to hold cryptocurrencies, and the like. So to conclude, I was thinking, if I had a magic wand, what would I change in the crypto market? So this is my wish list as an academic in this area. I think we need a lot more investor and trader education. So that's for sure. It is a bit alarming that 83% of Bitcoin investors have very low or moderate levels of crypto knowledge. We do need a lot more transparency, both on the coins themselves and on the exchanges. So as you know, there are plenty of cryptocurrencies around. Many of them have very little disclosure, very little transparency. And then there are plenty of exchanges around. And sometimes exchanges prop up coins. So the coin exchange relationship sometimes can get fraught in itself. So we need a lot more transparency in that respect. Things are far more transparent when it comes to Bitcoin, but when you go to altcoins or other coins, especially smaller ones, it can become a lot more opaque. We do need to acknowledge the energy problem, that's for sure. So denying it does not help. But it seems that solutions are in the making in terms of new consensus mechanisms and so on, or using renewable energy in order to at least partially address the energy consumption problem. Fourthly, we do need token disclosure databases. As you know, companies, for example, in the US, have to file their disclosures on a quarterly basis with the SEC, which is the US regulator, in a database called EDGAR. We have similar databases in the UK and so on. So Companies House, etc. We do need a regulatory body, and we do need a database which is easily searchable, where tokens disclose on a regular basis how they're doing, their performance. They put their white papers there in a way that cannot be tampered, and so on. So we really need that. Related to this, of course, we need creative and forward-thinking regulation. Unfortunately, there's a lot of regulatory mismatch in different jurisdictions when it comes to crypto. And I think this is very important. We need dispassionate crypto coverage. So media journalists do need to talk about Bitcoin, but the tone has to be dispassionate. It has to be based on evidence. If you ask me, preferably academic evidence, which has been peer-reviewed, which has been questioned and debated. Unfortunately, a lot of the journalism you see also tends to be paid for advertising rather than independent journalism, and that's again a major issue when an average person wants to get informed about investing or trading cryptocurrencies. And related to this, hopefully all of this should lead to a much lower level of short-termism and speculation in the market. And I think that will ensure a much brighter future for cryptocurrencies. So thank you very much for your attention, and I very much look forward to joining my esteemed colleagues in the roundtable.
Very much. It's always great to have the privilege of listening to you. We can always learn something when you share so generously your insights.
Thank you. Thank you very much.
This is a transformational. I mean, Arman, I think you used the word beast, but I'm not sure when we talk about dispassionate journalism, maybe that's not the way we should refer to it. But it is a transformative space. It's also a divisive space. I think, for the panel, we will use the approach to discussing this because it is something that does need to be discussed. It's not going away. I often refer to this as a little bit like Formula One. We're in the pit lane, we're testing a lot of things. Some of them will go out onto the mainstream roads and vehicles, and some of them won't. But this is an innovation, a technology that isn't going to go away. So let me, first of all, come back to my panel. As we introduced you earlier, but I will go through that again, just in case someone has just joined us. And for those of you, if you are joining us or you joined us just after the beginning, my name is Sarah Williams-Gardner and I'm the host here today. I run Fintech Wales, which is aimed at ensuring that Wales is a globally recognised fintech hub of excellence. And I'm delighted that we've got members joining us today on the panel. So we're joined by Stephen Quinn, who is very active in advising people here in cryptocurrency, Jack Davies, who's a researcher, and Minyi, who is the head of product at Ziglu, which is one of the new crypto exchanges in the market. I'm going to come now to each of my panelists and give Arman a little bit of a rest. But first of all, can I come around the room? And Minyi, I'll come to you first. And I'll ask people, just introduce yourselves. And how and why did you first get into the Bitcoin market, if that's the right way to say, or how did you first get into Bitcoin and cryptocurrencies?
Sure. Hi, my name is Minyi. I am the head of product at Ziglu. We're one of the 6 crypto asset firms that are regulated by the FCA. And thank you for inviting me to the panel today, and Arman for that amazing talk on the fundamentals of blockchain and Bitcoin. I cut my teeth in finance previously. And Sarah, to your question, I first dabbled into Bitcoin around 2014. And this was on the back of a conversation I had with an American VC, and he was mentioning that he was investing and putting Bitcoin onto his portfolio. And I was an allocator then, and as allocators do, we talk to each other, and I thought it was an interesting idea. I bought some Bitcoin. I remember exactly the price of Bitcoin then was around sort of 204, and I just thought, look, this was an interesting experiment. Let's see what comes out from there. And then from then on, I kept reading the thesis around that. I saw more interesting people getting into the space, and I sort of have a deep interest in technology and how that could transform. And the rest is history from there.
I'm sure there'll be some people listening thinking, wishing they got in it in 2014. So, well done to you. And Stephen, I'm going to come to you next and ask the same thing. How and why did you get into this space of cryptocurrencies, Bitcoin in particular?
Thank you, Arman, for a great presentation. Firstly, I'm Stephen. I member of the advisory board at W2. I guess my entry into Bitcoin, really, I come from more of an e-money background, and I think for me the interesting part with Bitcoin is more around the technology, and particularly what that potentially does in terms of how money can move around the world, how blockchain technology impacts that. And so probably back at 2013, I was invited to sit on a panel in Gibraltar, which have become one of the big proponents of this kind of tech. And I remember sitting on that panel thinking, from an e-money perspective, from a regulatory perspective, my job was to comment on that. And I didn't really understand a lot about it at that point, but it intrigued me. Which has kind of led me to be interested from now in terms of the investing side of things, but more around, as I say, the technology and actually underneath perhaps the headlines we hear of Bitcoin, what a transformational thing it could be, particularly in emerging markets and financial inclusion and all those topics that are on the everyone's agenda right now. So that was kind of how I got into this space, and my interest I think hasn't even peaked yet. We're at the very beginning of potentially what this might be.
Stephen, that's lovely. I'm going to come back to you on the emerging markets and the inclusion, because this was something that came up in a debate we were holding with students, actually, and some members of Parliament yesterday about inclusion and emerging markets. We'll come back to that. But Jack, I want to come to you next, if that's okay with you. How and why did you first get you're a researcher in the space, and I would put you very much in that dispassionate sort of reporter type case. So Jack, what brought you into this, and why did you first want to get involved?
Thanks. Well, I first got involved kind of by accident, just by vocation, really. I applied to work at nChain in 2018, and I knew very little, virtually nothing about Bitcoin and blockchain at all, and I've kind of learned everything on the job since. So, by reading up on everything I could kind of get my hands on. And obviously, as most people do, go down the rabbit hole, fell in love with the technology, as Stephen said, after that. So I've been working there for 3 years now on again, kind of the some of the applications of the technology, and also some of the kind of fundamental building blocks like cryptography and network theory. And then in 2019, so once I'd kind of fallen in love with the technology, as I say, I also set up the BSV Wales meetup group based out of Cardiff to kind of do a bit more blockchain education. And then since then, have also been focusing on two things, really: micropayments and immutable data. So kind of two of the different prongs to Bitcoin I see as main use cases. And then also now I also work with Blockchain Connected to kind of help further blockchain adoption in Wales.
Thank you, Jack. And we heard Arman mention investor education. Jack, you've sort of alluded to some of the work you're doing here in Wales to share that education. It would be really good if we just come back round to everybody. There are different types of digital currencies. It would be if we could share with people what some of those fundamentals are that maybe some of the newcomers need to understand. We're talking that there needs to be more education and investment. So let's come back round. And Stephen, I'll start with you and then come to Jack and Minyi. But maybe share and Arman again. Share this market. The diversity in the market as we see it, we're at sort of 31% of females actually getting involved in this. So let's come to you, Stephen, first, and then we'll come round to what do we really think investors should be looking at and researching and aware of?
I think that in any investment that anybody makes, if I'm going to invest in a stock or invest in a property, then I will spend a lot of time, with adequate research and understand what I'm investing in. I think that when it comes to investing in cryptocurrency, it's very much that you see that there's that fear of missing out that has been created, and people believe that I can put £10 into cryptocurrency this week, and this time next year, as Dalboy once said, I'm going to be a millionaire. So I think it's really important that, Arman mentioned ICOs, for instance. So there are and were multiple ICOs of, cryptocurrencies, which was literally just a white paper that had, no technology, no, solutions, looking for problems rather than vice versa. And, nothing really underneath that. And so many people invested in these kind of schemes, which were more like kind of, the boiler room schemes from the 80s and 90s, which were so so heavily reported that they didn't really know what they were investing in. And I think that the importance is, if you're going to invest in any cryptocurrency, is actually to have a look underneath the bonnet and try and understand what it is. And the way that one of the things that I would look for is that you'll have various currencies that perhaps, or coins, where they'll tell you something that they've done rather than something that they're going to do. And I think that's quite important, where it's not a speculative thing of it could do something, it's actually done something, that's been executed, and it actually has a proper use case behind it. And I think that's really important to really understand whatever you're investing in, actually, what's it there for? What is it there to do? Is it there to serve a purpose? Is it there to actually make something better and for change, which I think a lot of people that get into cryptocurrency are there for change? Or is it purely just a get rich scheme? It's just an ICO, here's a white paper. People think that, it's going to be issued at, a few cents and it can rapidly rise. Often it doesn't. And there've been some very high profile cases. There was in the news recently where these really were just scams. There was nothing behind it, and I think that's really important, just to make sure that you understand what you're investing in, to do your research, make sure that there is an actual technical application beneath that purpose, rather than just the purpose of getting rich. And I think that's where, if you're going down the get rich quick side, that's where you might get burned. I think that would be my kind of thought on it.
Yeah, and I suppose that's sort of general advice, isn't it? For, as you quite rightly point out, to with any investment, you need to do your homework. Jack, I'm just going to pull you in here when you talk about needing to do your homework, because there are many different currencies, and we've talked here about ICOs and new propositions coming to the market. But maybe we could look at that, and we could look at the doing your homework on the more well-known currencies.
Yeah, sure. And I think also Stephen's quite nicely covered, doing your homework on if you're coming at it as an investor, trying to make money off cryptocurrency tokens, then all of that kind of common sense and things will have to apply as well. But I also think it's important to think of, when you invest as investing in a technology. So we're talking about like enterprises, kind of businesses, governments. I think they have the same problem because blockchain is touted as a solution to lots of problems they have. But then, it's hard to see the wood for the trees with how many different projects there are. There's literally hundreds of things that will claim to solve something. So I guess a good starting point would be to understand kind of the fundamentals of Bitcoin. Unfortunately, the Bitcoin white paper is actually very short and succinct. It's kind of amazing how succinct it is. So I definitely recommend just kind of getting to grips with some of the basics of how Bitcoin works, because that will actually set you along the path quite nicely. And anything you don't understand in that paper will kind of, will fill in a lot of the gaps in your knowledge. Then I think, looking at, as Arman said, you can classify blockchains and DLT into these different kind of buckets. So if you look at something like Bitcoin and then onto Ethereum, obviously kind of the next most popular used blockchain, but Ethereum has a very different model. It's kind of uses this account-based model. So if you want to understand the market broadly, you kind of have your Bitcoin-based blockchains, which have what we call technically a UTXO-based model, and then you have the account-based blockchains like Ethereum. So if you know a bit about both of those, and you should be able to at least classify projects using that, and then the associated benefits and drawbacks of each. Again, also with the different consensus mechanisms, it's good to familiarize yourself with at least one or two of those. So proof of work, proof of stake. I know there's lots coming out, but at least those two will give you good grounding. And then also to even have a quick look at something like Hyperledger and private blockchains, just to familiarize yourself with the differences. Really, as Arman said in his talk. What are you need to be, as you say, dispassionate about what are the actual features and benefits of each type of private versus permissioned. And I think, as long as you can categorize a particular blockchain project, then you can normally see if it will be a viable solution to invest in for an enterprise or something. So I think those kind of three areas, Bitcoin, Ethereum, and then the private ledgers, if you have a good kind of working high level understanding of these, that'll probably set you in good stead.
Yeah, and you sort of brought in the consensus mechanisms, and I know Arman talked about the transparency there on the energy use. Minyi, it's slightly different question for you, because as the head of product for a crypto exchange, how do you cover this investor knowledge and make your product open and transparent and informative to the users that you are supporting and attracting?
Yes, so that is definitely interesting. So in the space itself, as you know, there are a number to choose from, and we've taken a very deliberate approach in making sure that we are curating that list to make sure that we've done a due diligence in terms of the fundamentals of the coin itself, and whether it would sort of have broad-based appeal to the users. And then through the product, we try to make sure that users, it's very clear exactly what you're buying, and the pricing around that as well. So we're hoping to kind of guide users through that process. And I think one of the other components of having a lot of coins to choose from and not knowing where to do that is perhaps to dabble in maybe in a regulated company, for example, where they could have probably better boundaries in terms of protecting the finances in there.
And we'll come on to regulation in a minute, but you've mentioned several times this is something that people talk about. But just for those people who are listening, Ziglu has an e-money license and it is regulated under the FCA. That's my understanding? Is that right, Minyi?
Yeah, that's right. And we're one of the 6 crypto asset firms that are being regulated by the FCA, and obviously there are still many others in the process at the moment, sort of getting their licenses. But we were fairly thoughtful about when sort of founding the company. Mark was very thoughtful about making sure that these licenses are what we need to have, and we actually have them. I think there was a FCA report a couple of days ago where they mentioned that I think there was around sort of 111 crypto asset firms that are basically doing business in UK, without the right licenses in there, and that. But I think they're probably in the process of getting the license in, towards there was obviously COVID, that has definitely impacted the ability for people to process some of that applications.
Yeah, because when we're talking about investor education, obviously not only understanding the coins themselves, the blockchains and the components of the different currencies, but also the investigation and the education around the channels by which you are trading or buying. And obviously that's something that you've said. Arman, I'm just going to come to you. We talked about, and you raised this, the investor education, and what we've seen here, we've seen from people like Stephen, who are advisors and clearly very active, knowledgeable people in the market, researchers like Jack, who make sure that they share this information across their networks, and Minyi, who's developing products to do their very best in educating the people investing in this market. What do you think then is the role of academia, given your role at Cardiff, to help with this investor education?
Thanks, Sarah. That's a very good question. I think they do have a very important role because by definition, they're supposed to be at the forefront of academic research. So they should, in theory, understand the concepts well, and then also putting on their educator role, hopefully train both students, university students, which is what we do at Cardiff University through our Fintech modules, but also the public through, for example, public engagement courses, and the corporate sector through executive education. And again, we have a range of activities. Of course, we're not alone. Other universities in the UK are, I think, doing generally well in this area. There's been a lot of attention that has been paid, but I would say there still needs to be done a lot more in the overall investor education and trader education landscape. Can I, Sarah, very briefly add something to the responses of Stephen and Jack to your previous question about the types of cryptocurrencies? I think they both made very good points regarding the fact that cryptos can be divided based on their usage, based on their consensus mechanisms, proof of work, proof of stake, based on their block sizes and so on. But we should also not forget stable coins, government coins, central bank digital currencies, and generally governments and central financial institutions are not just sitting. They're also creating and innovating in this space. Of course, again, philosophically, the question is, even if they create fantastic cryptocurrencies or digital currencies, does it go against the original spirit of the Bitcoin and the early cryptocurrencies, because they are governed and they're controlled, whereas, well, an entity like Bitcoin, for example, has no central regulator? And I think that is a question which is not easy to settle, and that's a very interesting thing to talk about. But yes, I would have added also stable government coins, central bank digital currencies, and so on to the whole mix.
Yeah, and I don't know if Jack or Stephen want to come back on that, but you very rightly raised that earlier on, which is, crypto is and can be and will be looked at as a digital fiat currency. Jack, do you want to come back on that?
Yeah, I think that's a really good point. And it shows just how many things there are to consider when you're having this discussion. Because again, in terms of the spirit of Bitcoin, I think Bitcoin, some people think about it as a replacement for fiat currency. I personally don't subscribe to that. I think it's just another kind of type of money, really, that we want to be using alongside. And we're seeing things like CBDC now. Again, perfectly valid form of a kind of digital money. But one theme I'd say that I'm kind of seeing through this, and it's something to note, is that people are often quite quick to dismiss Bitcoin as kind of because it was the first, and there's lots of technological progress and innovation that's happened since. But those properties that we mentioned of kind of transparency and immutability, these are things that are very relevant to any system that is being built, in particular CBDCs. So whether a CBDC, is issued by or will likely be issued by a government, and it isn't quite the same in nature as Bitcoin. It can actually form part of a kind of hybrid system. So you might use Bitcoin to ensure the transparency and immutability of it. You can see that kind of thing with Microsoft bringing out an identity solution where they kind of use Bitcoin as an immutable data layer, because they understand, you actually need these qualities in whatever system you're building, and it applies to so many different industries. But yeah, I think there's not necessarily a conflict between Bitcoin and these other permission systems that you can build. Often it works as quite a nice hybrid solution to go alongside it.
Thank you. Yeah, and just reiterates to those who are maybe the uninitiated just how much there is to really unpick and understand in this space. And I think one of the caveats we will say is don't invest if you can't afford to lose, and be careful about what you invest in. But Stephen, did you also want to come back on those points that Arman was raising, and just to give some more colour to where Jack was taking the conversation?
Yeah, of course. Yeah, I think it's an interesting time, because if you look at the principles of Bitcoin and what Bitcoin was about, I think that in many ways it's educated the mainstream regulated financial sector in some ways about things that perhaps could be done better. There was a point around the darker side of the economy in terms of money laundering, etc., which is a rabbit hole perhaps we won't go down right now. But equally, on the other side of things, when we talk about fair journalism, cryptocurrency, Bitcoin particularly, handed out for being the way for the money launderers and terrorist funding to be moved around the world kind of anonymously. But when you look at in the fiat world, still there's far more incident of money laundering using dollars, etc., perhaps, than there is in Bitcoin. And I think the Bank of England recently said that there was, I can't remember the exact number, but it was several 200-300 billion of notes that they don't know where they are. They're just somewhere probably circulating the black economy, and bringing that round to kind of the central bank digital currency. I don't think as much as we talk about the replacement of cash, I don't think that will happen in the short term. But I think with central banks now looking at digital currencies, China, many others looking at this, I think it's a hybrid between the two. I agree on that, and I think it's a big step. The FCA are investigating the viability. The Bank of England are investigating the viability of the Bitcoin, I think, as it was termed, so it's in the mainstream now. And I think that, that perhaps at the very beginning, with the decentralized nature of what Bitcoin was meant to be and what cryptocurrencies perhaps were meant to be, I think they have educated the banks, and, also they've got to be alert to that, because, particularly for banks can be quite protective, perhaps, and rightly so, of their revenues. So this is a threat to that. It's a big shift, and I think that story will unfold over time. And there's stories like in places of El Salvador where Bitcoin becomes a legal tender, for instance. So it is happening, but I think it's slow, and I think that the central banks and banks generally are being forced into action and to recognize this, because I think that the point that you made, Sarah, at the beginning is that this isn't going away. Back to 2017, it was a bubble. Everyone thinks it's this bubble, but this bubble doesn't seem to stop. So I think that it's inevitable that these things happen. It's just how, and then how that's applied and executed perhaps in the future. But I think there's exciting things that can come from that, and for a better global economy perhaps.
Yeah, and thank you. I was going to raise the point about El Salvador and whether we think that's sort of opened floodgates to change, because there seems to be a high response to sort of activities like that within this new space. But as you quite rightly say, this isn't going away, and the traditional financial institutions are going to have to get involved and understand this. And I've had this described to me as it's a little bit like Skype, sort of 10 or 15 years ago. BT and the sort of communication networks very much didn't want this. They weren't embracing it. They were ignoring it. They were hoping that it was going to go away as some sort of annoyance. Well, we wouldn't be able to communicate the way we are right now through the pandemic if that had not subsequently been bought. I think it was bought by Microsoft. So, you know, I think we're in that stage where we have a technology and innovation, which we need to understand what the rules of the road are. We need to understand where regulation is important, and we need to understand how we communicate and educate those people who are going to sort of participate in it. So my question: do we think it's lost some of its founding principles? You know, when it first came into the market, it was a disruptor, but is this a very natural sort of flow for an innovative product? Arman, I was going to come to you first, but if anyone else wants to put their hand up and jump in, you know, please do. I'm just trying to make sure we include everybody. But yeah, do we think it's losing some of its initial founding principles?
Go ahead, Minyi, please.
Yeah, so I was gonna come after you, but thank you for the opportunity. So I was thinking around sort of, and Arman has touched on a little bit, I think in the talk earlier, around sort of the creation of Bitcoin was really coming off the back of the financial crisis of 2008, which I went through, and you know that was obviously one of the worst financial times we had since the Depression, and the paper was really trying to solve sort of conceptually, you know, the passion question around sort of, you know, what is money? Can we, you know, is there a different, can we create money in a different way? You know, what is a bank? Can we be our own bank? Or, and what is the influence of internet on money, and the questions around that? And so that has sort of led to the progress of Bitcoins as it is, but it was an experiment at that point in time. And it was also fundamentally asking a really important question: can we do governance in a different way? And if you look at sort of take a step back and look at the meta level of where Bitcoin is, or how it has triggered the changes around some of the ways we do things, I think on a governance level, it has been a social influence of some kind. It has led to changes. So I would say broadly, you know, it hasn't really quite loses its kind of libertarian roots. But then on the practical level, if we think about Bitcoin as being sort of, you know, online money or digital money, or proto money, as some of them, you know, call it, and the ability to be able to be a coin that has value, and that you can use it to trade for goods and services, I think it has also fulfilled its initial sort of founding principles. And I think it is probably more prominent in the developing world than in the developed world. So I think, you know, we live in a world where there are two sides of it, and we're definitely in the developed part of it. And in the developing world, there are still a lot of countries where it's very corrupt. It doesn't have the, you know, optimal government controls. It has very loose sort of financial and infrastructure and risk infrastructure, which means that a lot of residents in, you know, frontier markets or emerging frontier markets do not get the chance to build their wealth. And it is not, you know, they just lose out in a geography lottery, you know, apart from just being in that part of the country. And I think digital tokens such as Bitcoin and Ethereum has helped in you know, building their lives in that way. So, but I'm taking more of a soft point of view. I'm not sort of going down exactly what it did, but from a conceptual level, I would say yes. From a governance level and from a practical level as well, in developing world, I think it has sort of, you know, met its goals in that way.
Yeah, and it's interesting to see, isn't it, 2007, 2008, the banking crisis that many of us on this call might have lived by or lived through, has actually caused a moment of rethinking traditional finance. Providers have been challenged. We've seen the challenges come in. We've seen many fintechs. We've seen many different financial innovations. We've seen open data. We've seen the progress of PSD2 regulation. We're moving through the open finance and into open data. And there's so many different really exciting things that are in the broader sense. But just bringing this back to Bitcoin, and Stephen, I wanted to pick up on something that you raised earlier, because Minyi has very nicely segued us into the emerging markets and the inclusion. And where do we think the cryptocurrencies, Bitcoin, Ethereum, whichever, can really help with that inclusivity element that they purport to be able to do?
I think that kind of financial inclusion has been a massive subject for a long time. You know, in terms of how do you get people access to the financial system that perhaps, you know, particularly in developing markets where that isn't so easy. I think there's a couple of sides to it for me. For instance, you know, you look at people, you know, in countries where they're working in different, you know, all around the world, and the remittance of money back to, you know, there's lots of remittance businesses out there, but, you know, it's slow. It can be expensive. And there's no real reason why in the real world payments can't be instant, you know, and today it's not. And there are perhaps many reasons for that. So I think that's one side of it. I think there's another side to it as well, in terms of when you look at, you know, Africa and developing countries, there's another side to it, I think, as well, in terms of, you know, when you look at cryptocurrency, when you look at blockchain technology, in terms of things like aid, you know, where aid goes, and how often, you know, making sure that the money goes to the right people for the purpose for which it's meant, and that doesn't necessarily always happen. And I think a big thing for me where this kind of technology could really play a part is ensuring that, you know, money that is intended for a certain purpose is then, you know, it is then distributed to those people, and you can definitely then see, you know, that money's then doing the job it was meant to do, rather than disappearing. And the transparency and the accountability that blockchain technology, for instance, and cryptocurrency enables means that things like that potentially would never happen in the future, you know, right? And so I think that there's two sides to it. I think there's the inclusive nature for, you know, consumers, but obviously there's perhaps technology restraints at times. But I think on the other side of it, in terms of particularly how aid and money moves around the world, I think this kind of technology is a game changer for that, and, you know, and could make and will make a significant difference in the future. And I think that, you know, going back to, you know, how things change, you know, that 2008, particularly cryptocurrency, trust often comes up. You know, if it's I think in 2008 people lost trust in the traditional banking system in the way that it collapsed, which set us on this path now. And I think that trust is now building. And I think that's where this, you know, the trust word for me is so front of mind when it comes to this kind of tech. And I think for me, the biggest part of it is actually, as I say, where that money goes and getting money to the right causes and to the right people, and just making it easier and more transparent for these, you know, for these kind of things. So I think that's for me is the big part of the inclusion part.
Yeah, and I think that, you know, what blockchain can offer and that transparency of transactions. Arman, I'll pull you in a minute because I can see you're keen to come in on this. But we've seen here in Wales, you know, blockchain solutions that have done exactly that, wanting to be able to trace the payments, the aid payments going out, and ensuring that they get to the right courses. Arman, let me bring you in because I can see you're keen to contribute here.
Oh, thank you. Just briefly, there are surveys called Veracity Index, I think, by Ipsos Mori, which looks at to what extent people trust different professions. And bankers after 2008 used to rank very low on that particular trust survey. but over the years they have come back up slowly. They've climbed back, and they're not among the top 5, I think, but they're slowly coming back up, and so that's a good thing for the finance sector. It seems that trust is slowly creeping back in, but at the same time, this is related, Sarah, to your question about emerging markets. My view is that emerging markets can benefit from cryptos in 2 ways. One is obviously micropayments, where there might be more need for that kind of service within emerging and less developed economies, but also in some less developed economies, there's also probably less trust from the people in the government due to the political nature of things. And for those reasons, again, cryptocurrencies can be a useful store of value where fiat monies can depreciate fast due to economic mismanagement or due to lack of trust in their domestic central bank, etc.
No, and yeah, I think your point is really well made. And when we talk about, we know we've got an emotional, sentimental sort of conversation that is going on around this, but 2 things that I want to cover before we finish, and we're sort of in our last 10 minutes here. I just want to come on to the energy element of it. I spent yesterday with some students from schools here in Cardiff debating crypto and Bitcoin, and the environmental element was large for them. And you made the point, and it's been backed up by people here, about the difference of proof of work and proof of stake. But show me a hand who wants to just come back to me on the energy side and the energy usage here, because there is a perception that this is a huge energy user. So Jack, you put your hand up first. We'll come to you first, and then we'll come on to yourself.
Yeah, thanks. I agree. It's a hot topic, and it's an important question. And there's so many different facets to it that we probably can't cover them all now. But for starters, one thing I would say is that a lot of this comes down to it's a question over efficiency. It should be a question of efficiency over raw consumption. Like I find it difficult to criticize systems just for consuming energy, because we consume energy for all sorts of things all the time, and it becomes very hard to decide what makes something valuable to another. If Bitcoin consumes a lot of energy, but it does a lot of good for all these emerging markets, then is that a problem? We allow energy consumption for all sorts. It's more about, as Arman alluded to earlier, making sure that energy is largely green, in its production. And I think this is something that is sometimes overlooked in the sense that Bitcoin is the proof of work algorithm actually has a very strong incentive to use green energy, because at the end of the day you just have a network of miners who are competing over these very fine margins, and their largest cost really is in their electricity expenditure. So they need to generate electricity in the most sustainable and cheap way possible, which tends to be by investing in long-term kind of green resources. So that's one thing. And the other point I'd like to mention is that this also comes back to a technological question of things like scalability. So I think a lot of people find it hard to stomach that consumption of Bitcoin, energy consumption of Bitcoin currently, when the transactional throughput is something like 7 transactions per second, and Visa's doing something more like in the 50,000s. So how can we justify that much energy consumption over only that much throughput? So that is a question of transactional efficiency. So working out, what are the best ways to scale systems like Bitcoin? How do we get the energy use per transaction as low as possible? And there are lots of ways of doing that. So I think it's a question of making sure that we focus on those technological solutions, as well as trying to incentivize and push miners through that kind of what should be a natural process, but towards using green energy resources.
Yeah, a really, really good point. Arman, I'll come to you for a quick response on that, because then I'd like to just sort of go around the panel with one last question. So Arman.
Thank you. So in addition to what Jack very well said, the 2 solutions, so technological solutions in terms of consensus mechanisms, but also using renewable energy. I think there is a third set of solutions, and that is to just dial down the temperature in the market in terms of sentiments. Because if people are less emotive and less sentiment driven, they won't trade too much. And when you don't trade cryptocurrencies too much, then it means there is less verification required. There is less load on the computer network. So if you come to decisions about the crypto market, again, in that rational, calm, dispassionate manner, you won't be trading every time the price goes up or down. You won't be trading every time Elon Musk says something. There is no need for Elon Musk to point out the energy consumption. That has already been mentioned several times. But so we need a market that is less celebrity driven, less sentiment driven, and a lot, again, I probably overemphasize this, but a lot calmer.
Yeah, and Arman, you've stolen my last line, and my last line was going to be about whether we think Elon Musk is helping or hurting. But seeing as you've had a view on that, and you talked about trading, and you talked about the frequency of trading, let me come to Minyi, which is, if you could answer the sort of the question, Elon Musk helping or hurting, but maybe you might want to come back on the exchange point as well.
Sure. So what was the exchange question? I forgot.
Okay, so Elon Musk helping or hurting?
Yeah. So I think the answer is it's not a zero-sum game. I think with Elon, I think I'm largely in the help camp on the basis that I think he has definitely helped raise awareness to his followers, and just because of his celebrity status in that way. And he did point out sort of obviously energy consumption around that, and several other faults. But I think he probably, and I'm probably just guessing here, that he has the intention to really make it more robust in the future. So that's probably in the help camp, and him raising awareness and being able to, Dodge, apart from Dodge, I think he was also lending his intellectual curiosity and weight to the sector. And if he can drive some of that interest, which leads people to investigate crypto, particularly if they can investigate in crypto in the areas that they are particularly interested in, it might help them overcome the hurdle of understanding more challenging concepts such as proof of stake or proof of work. If you're trying to understand proof of stake in, for example, agriculture sector, and you're not particularly interested in agriculture sector, that just has a double whammy hurdle in understanding it. So I'm definitely in the help camp, I think, for this one.
Excellent, thank you. Stephen, I'm going to ask you, Elon Musk helping or hurting? And just picking up, he is raising points that need to be discussed. And to Arman's point, if they are discussed in a calm and dispassionate way, then they raise good points, and also they do form the education. So, Stephen, Elon Musk helping or hurting?
My view is it depends. There's another question of who was Elon Musk helping? Was he helping himself, or was he helping the crypto space? So perhaps that's a separate issue. I think that the old saying about there's only one thing worse than not being talked about is not being talked about. So I think from a profile perspective, it's great. I think it highlighted a lot of the issues, perhaps around the environmental concerns, etc. I think it also perhaps highlighted some of the issues as well in terms of people getting, Arman mentioned it, the whole thing about pump and dump. It was with the prices rose quite dramatically, and then when Elon Musk kind of perhaps stopped Tesla from accepting Bitcoin, the prices dropped. So, and I'm sure he didn't make any money himself in that process, of course. But I think there's two sides to it. I think for me, anything that can bring it to attention and educate people, but also educate the financial system about how it can benefit, I think is a good thing. So I'm kind of in two camps. I think he helps and he hurts at the same time. So it's probably not the most succinct answer, but that's kind of where I sit on it.
It's a fair answer, a diplomatic answer. But Jack, are we going to be able to get you to come down on one side of this? Elon Musk, is he helping or hurting?
Unfortunately, not. So I think the having studied Bitcoin for a while, I'm of the opinion that Bitcoin has a robust enough design that no one person really should or can have enough power to determine its fate, let's say. So I think, it's not the be all and end all in either sense. And I guess it's a point on its trajectory, really. Whether it has forces to have conversations that are awkward or positive, at least it's advancing the conversation. I do worry that I don't think Bitcoin's getting hurt or hindered or anything necessarily, but I do worry about some of the kind of, especially the younger investors who will just base things, as we said, Arman said, the lack of knowledge of the investors in it. So I do worry that some people will get hurt. When you have that much influence, it inevitably be winners and losers. So that's my only real concern about it.
And that, that's a really good point, isn't it? We these influencers and profile celebrities do and can influence the way that people engage with these things. So Arman, let's come to you for the last answer on this from the educational point, which I think Jack has quite nicely brought in. Elon Musk, is he helping or hurting?
I'll give you a very quick response. I think Elon Musk as a creative individual who's helping renewable energy, who's making solar panels, definitely helping in the energy consumption sense. But as a celebrity who is emotionally tweeting every now and then, maybe a particular coin symbol, a dog or Doge a coin, etc., laser eyes, etc., I don't think that's helping. And that's partly him, partly his fault, but partly and more fundamentally the fault of the celebrity culture. And I think that's the more fundamental issue here. The celebrity culture is destructive, in my personal view, in many ways, especially when it gets into finance.
So thank you, Arman. And we started this debate saying that this isn't going away. We've concluded that we don't really have one side of that, help or hurt. What I think we are all in agreement with is that raising this for dispassionate and calm conversation is very much the right thing to do, to educate people and to help them understand what is possible in this space. We know that the blockchain has a lot to offer on the transparency. And we know that there is some way to go here, but this is a discussion that isn't going to go away. And I think the most important thing for me is that we bring it into the mainstream, that we encourage and include as many people as possible. We take a little bit of the emotion and the sentiment away from it and the celebrity status and impact, because that's possibly not helping us, but we are bringing the discussion to the table. And I think from that perspective, I'd like to thank those of you that have joined me today and bringing the discussion to the table. It's been a pure pleasure to work with you. So I'd like to thank Arman Eshraghi for your time and effort, especially with your keynote, and thank you for sharing your expertise. To Stephen Quinn from W2, thank you for joining us and bringing some great depth to it. Again, Jack, it's always a pleasure to have your contributions on panels, and thank you for your help. And Minyi, delighted that we were able to invite you along and you were able to join us today, and thank you for your contribution as well. So today I've been your host, Sarah Williams-Gardner from Fintech Wales, and what I'd like to say is thank you very much for your time in attending. Diolch yn fawr, enjoy the rest of your day.
Thank you.
Thank you.
Thank you for watching. Rewatch all of our sessions online. Thank you to our partners.